Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is February 18, 2015, and today is Wednesday. So looking at the economic calendar, lots of news coming out today, starting out with the GBP. Lots of numbers coming out at 11:30 this morning, South African time. Some rate decisions, some claim count decisions, monetary policy decisions. So it's a major morning for the GBP. And then later today, around 3:30 South African time, lots of numbers coming out on the USD. So these two ones are going to be the major players today. And then later on in the week, we have just ECB monetary policy meetings. So, just for today, we've got some major numbers looking out today. So looking at the Euro USD, like I said, it's pretty much flatlined. If you shorted a little bit here at the 14.25, could have made about 30 pips, not much. But like I said, it's flatlined, and you could just play the ranges at this stage. Looking at the GBP USD, also kind of looks like a bull formation at this daily chart. We consolidated in this area between 149 to 151-ish, 152, and now we're trading at 153. Just to give you an idea of where we were at 170 over last summer. So there is a big opportunity for this to adjust itself and readjust itself somewhere in the 158, 155 area. 155 is a major threshold, so if it does break above it, I would look to get a little bit more aggressive, and that would be like an indication that it's reversing. However, at this point, what I would do is not going in with a number, but just see how it reacts today after today's number. Looking at the gold price today, gold sold off another 10 to 15 points yesterday. It's trading at 12.10. It's coming down to its bottom of the range here. You could look at this from this perspective of previous resistance right here, and then somewhat of a support. Previous resistance right here, and then somewhat of a support here. It's very hard with the gold because it's choppy trading, but I would be much more comfortable picking up some position here. Obviously, keeping a stop loss just above it at 1205-ish, 1200. I would be getting a little bit more aggressive at 1200, around that number. If it does break, then then I would close out the position. But you could tier in maybe at 1210 just to get yourself into it a little bit, and then see if it does go your way, you get a little bit more aggressive. But if it doesn't go your way, you could cut it down or double down, but responsibly. Okay, if you guys have been to my webinars, you know that I'm a big fan of being responsible and putting in your stop losses. So there may be an opportunity in gold, so I would really look to that. The Dow Jones on its dead high still, not doing much yesterday. Just it's sideways trading. There has to be some really good news, either up or down, for this to take it further. So you see it's on its dead highs. I still think we could get 8 to 18,500 this year. March and April would show me that, and then the summer trading I think will just sell off. But at large, the markets are still very strong, and things in the United States are pretty good. So that's what I would do with the Dow Jones. Looking at oil here, oil bounced a little bit, and now it's on its. It retraced a little bit yesterday. It was trading at 54 and change. Now it's trading at $53. Again, a little bit of a threshold. All the big money managers are coming out, and the analysts are saying, "Oh, it could still go down to $10." Maybe so, but the graph has got to show it to you. So, I would play the range at this stage. Also, tiering in, first tier, second tier, third tier. Getting in more aggressive once you see some sort of confirmation. If we do break this 43 level, I would definitely get a little bit more aggressive, even if we broke 47. But all in all, it looks like it's consolidating and not going further down, so I wouldn't get so aggressive on the downside on that. This is Fred Razak at CMTrading. I want to wish you guys a great trading day.